First, we are joined by KGL Resources with the ticker code KGL, a company focused on the development of their Jervois Copper Project in the Northern Territory. So to tell us more, today I am joined by Executive Chairman Denis Wood. Good morning, Denis.
Good morning. I hope all well. All right, so yes, you're right. I'm Executive Chairman. I've been with the company for 8 years, although I retired when I was 70, only got away for 8 months before I had to come back, but well and truly experienced in this particular project and where it's heading, and quite frankly. All right, guys and ladies, oh no, all right. Well, the one that was just up there, I want to make it very clear is please take notice of the disclaimers and forward-looking positions on that notice. Obviously, we're a public company and there's some issues there that it really must be addressed. So let's forget that. I want to start by just talking about copper first, because given the amount of time I've got, the copper work could take miles longer. I took this job on 8 years ago because I was very well in touch and in charge, or on top of copper production, particularly in the major mines in South America, and realised that copper was going to become very, very essential. And long and short of it is, me and the major shareholders agreed that what we do is focus on bringing this company into a 10-year mine life with a reasonable grade, if that was possible. Now, what we did do is for the last pretty well 6 years, we focused on exactly that, and we've brought it up to over a 10-year mine life with an average grade of 2%. Now that 2% is very, very high, but the long and short of it is I was correct that the international copper producers are getting into trouble. They will be running out, and their costs are starting to fly out the roof. What I didn't take into account is that going green, the way the governments globally are going to go, copper is even more essential. So there's not going to be enough copper produced, and there's going to be a much bigger demand for copper for the governments to reach their green requirements, going green requirements. Almost everything they do requires more copper. So I'm not going to talk about the detail. If you want to, we had a 40-odd page report that I did associated with one of our announcements we've done recently on the exploration, and it went to the federal government. The federal government have really blessed it, and they are currently reassessing copper as a strategic mineral. And given what's happened globally and the number of other countries, including America, that have, I'm sure the Australian government will, and given our position going forward, with all our licenses, the deposits all chalked up, we've finished the fees, I'm sure we're going to get some help. But to take our position now forward, to start talking about this particular slide, we really do have, we're in Australia, we're in the Northern Territories, and Northern Territory, we've got all our licenses. We've got a large copper system with lots of potential, and at the moment 23 million tonnes of copper resource, and it's still in the places we've been drilling open at depth. The high grade copper reserve is 2.1%, which, if people know what's going on globally, that's in fact, when you look at some other places, we're almost 10 times better on our reserve quality. Now, we did finish a feasibility study last November, and that was reasonably positive. However, we've been doing a lot of extra optimising on that. Now, our site as well is highly prospective. We've got 3 particular areas that we're working on now, Reward, Bellbird and Rockface. But frankly, they're probably very small percentage of the potential deposit, which we'll talk about a bit later. We are employing an experienced team now. I brought 2 very experienced directors in when I took back over 18 months ago, and we're just employed a CFO and a CEO with a lot of experience, and we're getting ready now to take the project forward. We do have a Glencore offtake agreement, and great bonus to that is that we're only trucking it to Mount Isa from where we are. So yeah, admittedly, it's a reasonable drive, but we're not having to ship it or rail it. So our carbon footprint because of that and because of the extra grade is very good and okay. And we have a very supportive investment group. So just looking at how we've got to where we are, I took over early in 2016. What we've done is focused on the copper alone. Now, there has been a lead zinc mine on site, and the pre-feas that was done before I turned up did have lead zinc in it. We certainly have lead zinc as a possibility, but because of the need for copper, we're focused on that to be able to get the finance to be able to build the project. So we started that in 2016 by focusing on a new deposit that I'd found at Rockface, and we continued doing that. Now, that took a couple of years to prove that it would be enough before we started the infill drilling. So in that time, I went and got the mining leases. I got our EIS approved. We did a pre-feasibility study. We've completed our arrangements and agreements with the traditional owners and the Central Land Council. We've acquired the lease around us, Uncle Creek, which has increased our potential quite significantly. Our EIS was lodged and passed. Our mine management plan's been accepted. We've got our underground and surface water licenses. So fundamentally, everything's been done, and we finished the fees last November. What we've done since then is growing the team here and doing the optimising, which we'll talk about in detail. All right, this is a quick summary of our copper resource. You'll see I joined the company late 2015, and quite frankly, the grades are all about 1%. And you know, we realised, the shareholders at that time, which include me, of course, realised that that would not be enough. And what we'd found at Rockface was suggesting we could go higher. So fundamentally, for the next couple of years, I focused just on it. And quite frankly, I was really the only geologist working on it. We were a pretty small team because the company had run out of money for the third time when I took it over, and I was underwriting the rights issue to get it going. But the long and short of it is it's worked lovely. We're up to 2% now, and fundamentally we did wipe a lot of the old resource out that was chalk because of the low grade nature on it, and that's helped bring the grade up. But we do now have a 11.5-year mine life. We are targeting 30,000 tonnes of copper a year, and we do have an offtake with Glencore. This is the feasibility study highlights. Of course, what I'd suggest you do if you're interested, that you go to our last November, our announcement on this. The long and short of it is it does change a lot depending on where you think copper price is going to go and where you think the exchange rate will go. They're both important. The long and short of it is where we did it fairly conservatively at what was predicted to be the copper price by the experts, and the exchange rate, which is meet future demand there, which is IRR of 40%. And but the bullish price forecast at the time would have taken it to 49%. But the details for all of this have been made public on our email address, web address. All right, so what we have done, and you know, I'm very well aware, same as the board, of what happens if you start a construction like this company and not get it done on time. Delays, and you only got to look what's going on with builders in Australia and with the governments with their infrastructure and everything that's going on. You've got to get it done on time. So the main purpose of the optimising that we've got into has been working on our mine plan and the process plant, which I'll do a bit more detail on shortly. But we've also got optimising with our contract management. Because we're not a mining company, we are using tier 1 contractors for the process plant and the mining. Government support, we are certainly working on that, and we do expect the federal government to make copper a very strategic mineral. And we've also been looking at increasing the size and the grade of the resource. And what we have been working this year is to bring the first 2 years of mining up to measured status so that we would get finance. So the real purpose for the optimising is to make sure we can construct it on time. All right, the mine plan optimising, should just be quick on this. We've expanded the current mines, but we've changed the mine plan from the fees. We're no longer bringing undergrounds in early. We're focusing on the open cuts. And as a consequence, I've reduced our mining costs. We've doubled the size of the mining equipment we're using. So we've halved the amount of labour for the open cuts. So the main big area of improvement here was that. I took the plant up from 1.6 to 2 million tonne a year because the open cuts are lower grade, and this will still allow us to stay at 30,000 tonnes of copper a year. We've optimised the flotation design, which is the majority of the processing, and we're using Jameson cells from Glencore, which we made in Australia, which will help reinforce that. But we've also redesigned the rest of it to look at optimising it to reduce the amount of people that are necessary. Rock face potential at depth, you can see here, this is fundamentally the downhole EMs of rock face and the previous drilling and grades. And, it was getting a little bit weaker at the bottom. So, but what I did do this time around is I drilled a hole 575 there, 120 metres, I think it was, 130 metres below the mine plan. And it's come home at 5 metres at 2.43. The other two we drilled there come home, one of them come home at 12 at 2.6, and the other one was 3.59. So obviously increasing the depth at rock face is a real advantage, and it's potentially still going deeper. So we've got an opportunity here to keep expanding the potential at rock face. Reward, as I said, we've expanded the open cut. We've doubled the size of the equipment. The long and short of it is it's our largest deposit that we've got at the moment. And the funny thing is, from the structured J, it's the furthest one away, which is a bit unusual. But there's still plenty of copper resource around it, and including there, if you see downhole EM at Marshall Deeps, the downhole EM's been fairly positive for us at determining where the copper is, and in fact at rock face it was superb. But we do have plenty of chance to expand rewards growth, but also there's potential of lead zinc there as well. There's quite a large amount of lead zinc around. Exploration potential. Look, that's it. We call it a J. You'll see there that just look at the picture. It's got two white squares, well, two lines around it. That's our two leases, the Jervois lease and the one I bought around it. That funny J structure going down towards the middle and bending round, that is all resource. That's about 14 kilometres long. You follow that ridge around, and there's a couple of ridges, about 3 for most of it, following it around a big J, and copper pretty well outcomes at the top of all of it. Plus, there's a lot of density and downhole EM gravity appointments underneath it. On the left side of that, going sort of pretty well vertically, but diagonally a little bit, you'll see a big fault. That's a massive Jervois fault that's actually moved 6 kilometres. And quite frankly, is very responsible for what's happened in we're a 1.7 billion year old lease, highly metamorphosed, and the other side of that fault, it sticks probably 300 to 400 metres out of the ground and runs along the whole western edge of our lease. That moved, as I said, 6 kilometres, and it's moved twice in its period. So quite frankly, all that structural move. On that exploration program, I have focused for 8 years on the deposits we knew, the three. They're on that there now. You can see the red and blue one. That's the reward one at the halfway up the J. And then down in the J, you've got one on one side, that's Bellbird, and then you've got Rockface. So we have only really focused on them, but there is plenty of other opportunity. And to my personal opinion is, after spending 8 years on the geology here, is I think a lot of the super stuff's going to be at much lower, and we're actually just about to start. Next year we'll be looking at some of the lower opportunities. All right, so the current share price is about 16 cents. It had been 70 before the copper price started to go back down and I left. We've got about 600 million shares. We've got a market cap getting on to 100 million. And the long and short of it is, we normally, if we're raising cash at the current level, The major shareholders are very, very solid and supportive. Most of them have been there since this company started, and that's years before I joined it. And they brought me in, funny enough, and a couple other major ones have come in since. And they're all here like I am, and that's to get this underway, to actually get it producing copper, because of the need for the absolute definite need for copper, plus the absolute potential on this site of finding more. 16% of the company's institutional funds. I'm not a big fund supporter, although I do support Paradise a lot. They've supported me before, and they're 5.6%. 10% is owned by the directors. Pretty well all that's mine. KMP, the major shareholder of the Salem Group from Indonesia, and they've been a massive supporter of this project, this company, ever since it started. So the top 20 shareholders actually own 76%. And if you look to the graph on the left, you'll see that what has happened, which was totally not expected and predicted, is the copper price has come down, and that's sort of dragged our share price down with it. You can see there that the share price and copper price are in one-on-one.
But that was a great presentation, and I would encourage webinar users to reach out to Denis directly if they've got further questions via the contact details on the bottom of their ASX releases. But Denis, thank you again for your time.
Thank you.